All right, first up, the Bank of Ghana has signaled its intention to still go ahead with the targeted dollar support for bulk oil distribution companies to support fuel imports. This is despite proposals from the International Monetary Fund that the central bank should take steps to suspend the program. Here's George Affe with more.
Bank of Ghana's decision to still press ahead with this program came up during one of those engagements between the central bank and these bulk distributors of petroleum products. This is, however, not to say that the central bank has totally rejected the IMF's proposal to take steps to halt this targeted dollar support program. The IMF had maintained that it doesn't help in allowing the forces of demand and supply to determine the exchange rate, as it sees the Bank of Ghana's action as a deliberate regulatory intervention to control the exchange rate. However, persons close to the Bank of Ghana had argued that the decision to go ahead this program should be seen as a temporary measure, whilst it looks ahead to see how it will be feasible to totally suspend the program. The uncertainty about the future of this dollar support program for the bulk oil distributors brought some pressure on the Ghana cedi some 2 weeks ago. Some players have told your business that the decision to continue this program, at least for now, may help to consolidate the Ghana cedi's gains against the US dollar and stabilize the rates going forward. It could also go a long way to possibly keep fuel prices at the pumps unchanged from the 16th of this month.
Well, let's bring in the energy strategist, also president of Eureka, an emerging energy consultancy firm, Dr. Yusuf Suleiman, to react to this and other news in the energy sector. Good afternoon to you. Thanks for joining us, and congratulations on your new role as president of Eureka, an emerging energy consultancy firm. So the FX support to the BDCs is expected to reduce the dollar liquidity constraints the importers go through, a move that will help boost the supply of petroleum products and stabilize prices at the pumps. Now, the Bank of Ghana is doing this despite some caution from the IMF. So let's talk about this. This is some good news for the BDCs, isn't it?
Yeah, thank you very much. Indeed, Daryl, thanks a lot. And this is not only good news to the BDCs. I think it's just good news to petroleum consumers in Ghana. Because, Daryl, if we're to live by the dictates that it's the word and letter of, IMF prescriptions, then we'll ground the economy to a halt. Of course, they have to be trade-offs. And I think the reason that Bank of Ghana gave, for staying on course on continuous supply of this, greenback to the BDCs, I think that it's in the right direction. If assuming we were to, the Bank of Ghana were to stay the course and agree on what IMF is prescribing and pull off the support all of a sudden or summarily, we will not be able to arrest our pump prices. You know that the pump prices, what we currently feel at the pump price, what the consumer pays at the pump, a lot of it has to do with the exchange rate, Daryl. And even if the exchange rates were not to be the problem, by now, fuel price would have been going down. Because as I speak now, in the international space, we are experiencing a bit of, a downward trend or stable oil prices where the global prices are around, it has been below 80 for quite some time now. So the exchange rate has been the deciding factor. And so I still think Bank of Ghana, even if they have to stop, they have to do that on systematic and gradual basis while they monitor the market. And I think that's exactly what they are doing. Leaving the market, leaving the BDCs to their own fate to source for dollar external will just escalate the pump prices. And you and I know that, exchange rates contribute greatly to what the consumer pays at the pump. But going forward, what I was expecting is that we should rather look at, sustainable ways of minimizing our dependency on the dollar. And that's always what I have been calling, that this chunk of money, this chunk of greenback, about $350 to $400 million monthly will churn out to import finished product. If you could strategize to, source this product locally, that pressure will not be on Bank of Ghana, neither will we have pressure on the pumps. And there will be a huge relief on the cedi as well. So yes, whilst I support continuous injection to support the BDCs, let's look at sustainable ways where we can try to bring back our refineries, the new refineries, if we can champion them to bring them back to life, so that even if not all, we'll be able to sort some of this finished product locally. And if you do that, I think that should be a permanent solution, Daryl.
Yeah, important you raise this think about the pressure on the local currency? I mean, the pressure on the dollar. I'm sure that's also the concern that the IMF had, and that's why they were a bit skeptical about the Bank of Ghana's continuous forex support for BDCs. Now, you talk about this being good news for consumers, but how significantly is pricing going to be affected going forward, do you think?
Yeah, so at most it's going to stabilize the prices. What would have let the consumer benefit? In fact, stability of prices is still good for business continuity, as I always mention. So it's good news. How sustainable that's going to be, or how significant that is going to be, the significance will be on the fact that it will keep the pump prices stable. The pump price will come down if our currency appreciates against the greenback, and that's a huge task to do. It's mountainous, but it's not unsurmountable. I always think that we can do that, especially if you try to find alternative routes to relieve this pressure, perpetual pressure or perennial pressure that has been brought to bear on the local currency. Yes, so at best, Daryl, I think it will bring stability to the pump prices. By reducing the pump prices, it will mean that our currency has to appreciate against the US dollar.
And you also mentioned that currently on the international market, it looks stable. That's also a determinant when it comes to pricing of fuel. For how long, though? That's the question, as you study the market.
Yeah, so with respect to, if you look at what contributes to what the consumer pays at the pump, of course, the exchange rate is one, which we just talked about. Another huge factor is the prevailing global price of this commodity, what it sells. But as we look at it now, the prevailing prices, I always say that is difficult to determine. But for now, for the last 1 month, it's been below 80 for some time now. And I suspect that, or I project that it could be below 80 for some time now. And if it's stable, where it is in the 70s, for the last 1 month, it's in the 70s. And I think it could be there for some time now. The reason being that the factor that's been brought to bear to keep this oil price in this trajectory, they are still potent because the advanced world, the West, the US, European Union, they are not abandoning the course on this quantitative tightening. They still keep increasing the exchange rates, and once these exchange rates are increased, these currencies are strengthened, especially the dollar. And when there's any strengthening of the dollar, the cascading impact, there's always a downward pressure on the oil prices. And they plan to stay on course on that because that's a way they think they can stem the tide on their inflationary pressures. So yes, it's a mixed bag, but I think with these pressures, even with OPEC cuts and even with disturbances in supply, it's still not able to propel oil prices. So yes, I think it could be there for some time now. If it's there for some time now, with appreciable currency performance, I think we could have stable prices or even reduced prices at the pumps.
Another big news from the energy sector we are following, the West African Gas Pipeline Company and Ghana Grid Company having a go at each other over gas supply. WAPCO debunking claims that it's facing technical challenges which resulted in power outages in parts of the country. Gridco had earlier blamed the power outages to a shortage of gas supply from their Kwawu gas processing plant, and WAPCO makes you wonder what's going on. What do you make of this back and forth?
Yeah, so I followed that closely. I perused Gridco release, ECG Gridco release, if I put it that way, and that the counter release by WAPCO. And I think the WAPCO ones also hold credibility. If you look at the release of Gridco, they could have done better. I didn't see the need to bring WAPCO into the picture. And I think, Daryl, you all know that when Dumso is mentioned, the ground shakes, because we all know the reputations of Dumso. So it wasn't surprising that the WAPCO, they have to come back swiftly, to talk about the fact that there's no problem from their end. And I think that was a good move from their end. And when they came out with that statement, we didn't have any counter statement from Gridco side. So that supposed that what was the base of the whole thing, or the fundamental of the whole thing, was clearly mentioned by Gridco, and that was that they had a bit of upset at Kwawu gas. And Daryl, I will mention that Ghana, we are sitting on tentacles, and I'm saying that because in terms of power supply, if you look at the power available and then what the end user needs on peak demand, they are almost matching up. So if there's any shortfall in terms of any disturbance in these supply points, it's going to bring about a bit of load shedding. So going forward, for the statement, I don't want us to banter who is right and who is wrong, but I think Gridco could have done better. They should have, they needn't bring in WAPCO at this point. But the main thing that I want to tackle on is how sustainable. Are we going to have that 650 brought back? I'm told that Ghana Gas they have resolved the problem. That's a good news thing. So what we want to urge is that the thermal mix is still very huge in our generation mix, and gas contribute to the thermal generation mix. And so whatever we can do to sustain our gas supply to power generation point, we have to do that. Anything other than that, I think we'll have this happening periodically.
Well, if you ask me, the issue boils down to settlement of debt owed these companies that supply gas. That resolves the issue, doesn't it?
Yeah, that's partly because, for instance, what happened last time, if WAPO like this, they are just a conduit, Daryl. They are just a carrier, and that's how come they were so mad that they had to bring them into the picture, because they only carry whatever comes into the picture. So yes, if we have shortfall from Ghana gas, we can get from Nigeria. That pipeline is bi-directional. So it depends on maybe we have the financial ability to be able to get any shortfall within gas supply. But I always believe that we have to be self-reliant. Ghana gas, we have to champion Ghana gas to ensure that we don't even depend on West African gas pipeline on any day. But until that, we need to have maybe a financial backup available, so that when there's any shortfall in gas supply coming from Atwabo, then we should be able to source something externally from probably from Nigeria, and that boils down to financial, our financial capability. Daryl.
Dr. Isi Sulemana, we've run out of time on this discussion. Good if you could join us. Energy strategist, also president of Eureka, which is an emerging energy consultancy firm. I appreciate your time with us. Now, head of banking supervision at the Bank of Ghana, JC, has warned savings and loans companies to take a critical look at rising costs of interest rates and non-performing loans in their books. He says the level of non-performing loans is becoming a huge challenge for the savings and loans company. Speaking recently at the launch of the 20th anniversary of Bayport Savings and Loans in Accra, Mr. JC assured that the central bank is addressing the issue. Here to react is Trinibua Kodia-Boakye, who is Executive Secretary of the Ghana Association of Savings and Loans Companies. But first, let's listen to Mr. JC.
Observe some marginal increases in the MPL stock of Bayport. And Bayport could manage this to improve the asset quality of the institution. This will also enhance the profitability of the institution. So this is one area that Bayport would have to look at. Then also, Mr. Chairman, Bayport would have to diversify its funding sources to reduce the leverage and also, cut down interest costs. Otherwise, financial risk could crystallize. So these are the areas that we thought Bayport should be looking at to improve, to make more profits for the shareholders, to improve customer confidence, increase profitability, so that they can lend more to grow the economy. So look at these areas for us.
Join us, Trinibua Kodia-Boakye, Executive Secretary of the Ghana Association of Savings and Loans Companies. Thank you for your time. What's your reaction to this caution from the Bank of Ghana? How seriously are you taking the impact of rising costs of interest and non-performing loans on the operations of savings and loans companies?
Thank you very much, and good afternoon to your viewers and listeners. This is a welcoming information, because where you are operating within a space and your regulator is very much interested in what you do to become sustainable, what you need to do is to embrace the advice. And of course, they have seen that some institutions are having escalation in cost of interest. And when we say cost of interest, there are two fronts. One has to do with the issue of the price of the loan, and also one has to do with your liabilities, that is your deposits and all that. So we acknowledge this, and this is something that all the players are actually paying attention to. As you may be aware, we're going to have our AGM come this Wednesday.
Trinibua Kodia-Boakye is Executive Secretary of the Ghana Association of Savings and Loans Companies, reacting to a word of caution from the central bank, asking them to diversify their funding sources. and avoid financial risks as a result of rising interest costs and non-performing loans. We'll try and re-establish contact with him. We lost you, but I understand you're back. So you're making a point about this being one of the issues you're going to discuss at your AGM.
Yes, and that we must also appreciate that it doesn't happen in a vacuum. Where you have rising inflation, the economy is not doing well, your country risk is high, and also T-bill rates are very high. Your investors and your depositors will always look for a higher interest on your loan, on the loans they will give to you or the deposits they will place with you. We also have seen that the legal system, we also need to look at it so that these default loans, we can fully deal with it. And this is where we have been calling for a special court to handle the issue of default or recovery. But that does not prevent institutions from paying attention to this. And it has been our advice that we focus on more of current accounts and savings accounts instead of fixed deposit. And to the public, what we will always encourage the public to do is that we also have a role to play. We should not be chasing higher interest rates when we are making deposit with any institution, because the higher interest they offer you on your deposit, the more risky the business is. Again, when we also take loans, as we have been paying, let us continue to pay. When you have a challenge, engage your financial institutions. So this conversation is something that we are very much interested in, and we have been having it over the period, and we are going to continue this during our AGM.
Yeah, the central bank talks about diversifying funding sources. I think you mentioned that a bit. Does that solve the problem? Does that help enough?
There are a number of reasons why you will have a higher interest rate. The national economy is one. If you diversify, there are a number of institutions who have gotten investors from outside the country. They'll be giving you an interest rate which is lower, but your hedging cost is so expensive, and so it wouldn't. But of course, who looks at other alternatives instead of focusing on fixed deposit, and their services are also giving confidence to the public. Then the public will bring them the current accounts, the savings accounts, and these susu accounts that come with a lower interest. So diversification is a key thing, but it goes beyond diversification, which we are currently having this conversation.
And what can the central bank itself do to help? Because there are some who suggest, well, the rising cost of interest is as a result of the policy rate hikes that have been effected by the central bank recently. Certainly, they can't. They have a role to play in this. They can't absorb themselves of it.
Yes, of course. One of the ways, as you've mentioned, is the policy rate. Second, where we are able to work with the government to bring down the treasury bill rates, which is a big influence thing on the whole market. The third thing is where we have some of our members who give government employee salary loans, and the government is in default for a number of months. This is actually impacting on some institutions. So it's a conversation, and I am very sure that it's not going to just take a day to conclude on this. And we will continue to collaborate with the central bank and, of course, government, so that we all bring the interest rate down. Of course, if you have your interest rate down, it helps the customer, it helps them to pay their loans, default comes down. If the courts are also helping in recovery of defaults or defaulted loans, the customer pays the loan, the next person gets his money, interest rate goes down. I will encourage financial institutions to also look more at operational efficiency embracing technology,
Okay.
and we all working together to making the customer happy and the shareholder also bringing in the necessary funds to cushion the various financial institutions.
Well, in just a minute, if you can, what are your expectations ahead of the media budget presentation, the savings and loans companies?
It's our expectation that the government will honor his commitments to those that they are borrowed from. The next thing is also the financial institutions who have who are involved in the DDAP. We want to see progress made in it. Again, if Treasury bill, any plan that will make sure Treasury bill rate comes to the barest minimum to make the DDAP more reasonable. These are some of the things. And of course, those that have their funds locked up, including the controller loans that they are not remitting the financial institutions on time, if they are able to receive some good news, it will help boost confidence. And we are in to support the government achieve its target and to help the recovery of the economy. We are in to help the economy.
Thank you so much. Happy to speak with you, Chenebo Akoji-Abuache, Executive Secretary of GASALC. Thank you so much for your time. Well, he talked about interest rates on Treasury bills, or they continue to surge on the money market to nearly 30%, as the government recorded a 31% oversubscription. Now, the oversubscription was as a result of a lower target of 1.57 billion cedis. Head of Trading at Republic Securities, Patrick Edemagama, is on Zoom with us. So a 31% oversubscription of T-bills, and that's because government lowered its target to 1.57 billion cedis. Give us a breakdown of how the auction went last Friday.
All right. Good afternoon, Daryl. On the money market last week, the government raised about 1.9 billion against a target of 1.5 billion. Among these, it was enough to cover the maturing securities of 1.67 billion Ghana cedis. And then the rejected bids were about 5% of the 91-day bids that were tendered in. The 91-day cleared at a rate of 24.39, rising by 43.84 basis points, which took the chunk of the bids that were accepted. The 182-day closed at 26.03, increasing by 23.25 basis points. The 364-day bill closed at 29.64%, increasing by 39.42%.
What's your analysis of the outcome, and what are the expectations for this week?
Well, for this week, we expect the trend of the oversubscription to still continue, because the target we are expecting for this week is 1.7 billion for the 91-day and 182-day. Anytime we see targets below 2 billion, we see that the oversubscription rate goes up slightly. So we expect that to come in for this week.
Well, on the stock market, we have our eyes on share prices of Societe Generale and Farm Milk, which are expected to rise on demand this week. What is the anticipation?
Well, again, we are seeing bids rise for these two stocks alongside MTN. We expect that to continue for some time. The interest is there, but the supply side is really dry on the market. So when this continues, we expect the share price to also rise in the short time.
Yeah, and I want to ask you about this, because the Ghana Stock Exchange has indicated it's working hard to reduce the concentration risk on the capital market, a move that will reduce any losses as a result of an economic shock. Now, according to the Managing Director, Abnamwa, this is being done with the introduction of additional products on the market, such as the commercial paper market, which is awaiting approval from the Securities and Exchange Commission. What do you make of this?
We have a market that is highly concentrated on stocks. As of now, we have about 36 listed equities, 1 depository share, 1 preference share, and 1 exchange-traded fund. If you look at this composition, it's not really good for investors because they are skewed towards equities. But bringing in more exchange-traded funds and more commercial papers can give that composition that will help the fund managers to make the best out of the market.
Okay, thank you so much, Patrick Edem-Agama, who is head of trade at Republic Securities. I appreciate your time on the marketplace. Just to let you know what's trending on our website right now, myjoyonline.com/business. T-bills auction interest rates hit nearly 30%. Government gets 2.06 billion cedis. Also making news, if we can scroll up a bit, yeah. This story, a very important one, very sad, unfortunate. Former Bank of Ghana Deputy Governor Millicent Nah has died. You can read more about that on our website, myjoyonline.com/business. And that's the marketplace, everyone. Thanks for watching. We will be back same time tomorrow.